Hey guys, what's going on? December 27th, Friday, and today is going to be the day that's going to double, triple your account. Guys, here's the reason why. Everybody's so bullish today, but we're seeing early signs of move 2 or 11, which are highly profitable on Fridays. As a matter of fact, if you watched the last video I've posted, some of my biggest trades came in as a result of the move 2 in a low VIX environment when low VIX was transitioning into a higher VIX type situation. So yes, Tesla shares are up once again. Okay, we think it could possibly hit 339, 340, but if it doesn't move higher right away at the open, short Tesla shares, a drop, a pullback, not a crash, but a major pullback could happen place today in Tesla shares. Now, while we're so bearish on Tesla, the easiest trade remains to be Amazon. But your strategy with Amazon is totally different from the strategy in Tesla. So in Tesla, we want to short the bounces higher. Like we're getting a bounce high in Tesla shares this morning for apparently no news. The news that they're talking about is the fact that it got the $1.6 billion deal to, as a loan from the Chinese. But we already knew that about 3-4 days ago. So it's unlikely to move substantially higher on this pretty much non-event that the market has already priced in here. So what we're saying on Tesla, guys, based on our charts divergences course, okay, if you've taken it, spent quite a bit of time talking about LOM, a loss of momentum pattern. And this loss of momentum's, to give the easiest example, of course, is Bitcoin. But some of these high flyer names, in this particular case, Tesla is up 30% in 10 days. Okay, just when everybody gets so bullish thinking, oh, it's going to 500, it's going to 600. Just like, remember, Bitcoin, oh, it's going to 50,000, it's going to 1 million. Like, the moment you hear this type of conditions, everybody's talking about it, guys, this is when loss of momentum actually occurs in many instances, and we are pretty much within dollars away from that point. So in such instances, doesn't mean Tesla is going to fall 30%. It does mean you can have a nice, healthy $20, $30 move lower over the course of the day or two, which creates substantial opportunities considering where the options are priced. So be ready today, as green as everything looks pre-market, that institutions will take profits. And why would they be taking profits? Well, it'd be stupid not to take profits. The market's just been running higher and higher and higher. And don't expect to crash just because institutions are taking profits, but expect a healthy pullback here. The reason why they would be doing that, because in the first week of January, you will get some Chinese data come out. And if the Chinese data is good, the market will move higher. But the reason why they would be cautious today is because they will be taking money off the table in the expectation that Chinese data could actually be bad. And that's why on days like January the 2nd and January the 3rd, the first 2 weeks of January, the markets could get shaken. Now notice I'm saying could, and it is wise to position for that. And it is wise to observe what actually institutions are going to be doing today and Monday in the expectation of that January 2nd, January 3rd type trading environment. So this could ultimately create some awesome opportunities. From the standpoint of today, we want to stay short pretty much all the trades we've been covering in the last few videos, with the exception of Amazon. And there's reasons why we want to remain bullish on Amazon here, and it's mainly because of the volume characteristics. So basically the way you want to trade today, guys, is focus on a move 2. So the market is going to open in the green, then it's going to likely to sell off like this. Now don't discount the probability. Just like what it was trying to do yesterday. It set a double top, which resulted actually in a move higher. Highly unusual move. But typically, a double top will result in a move like this. Not necessarily, as you can see in the move 2, you're going to have a much larger move lower throughout the day. In the move 11, you're going to have a diminished move lower, but nonetheless, it's not going to be, everybody's going to want to buy calls. They're going to see the market open in the green, they're going to want to buy calls. Then they're going to scare it out of the positions on the pullback. Then the market could move higher again, and then ultimately finish lower, slightly lower, because of the profit taken by the end of the day. So be ready for this, but don't discount that this could actually take place. So when the market creates a double top, that is definitely your opportunity in the second half of the day. When the market could possibly create this double top intraday, this is going to be your cheapest entry point on the positions that are expiring today on the options. So Amazon has indicated in yesterday's video this volume characteristic is super important. It broke above that 1820 super critical level where the stock just been stuck for a while. Not only that, it actually finished above this key level right here of 1850, 1855. And so pre-market, we're noticing something that Amazon has not done in 5 months, which is at the point I'm recording this, it's trading at 91,000 volume pre-market. We have not seen that volume, okay, which basically tells us that by the time the market opens, pre-market volume would be way over 100,000 shares. So I'm recording this like an hour to, actually about an hour and a half right now before the market opens, where I took the snapshot of this, guys. So the volume, pre-market volume, Amazon is going to be above 100,000 shares. So these gains are real, because what we've seen, especially in the last few weeks, Amazon trading like 10, 20,000 shares pre-market. So now it's moving. As you can see, this $13, $14 pop in Amazon shares. If you pulled the trigger yesterday and we send the alert, guys, congratulations. I mean, those are easy gains, right? And when they're supported by strong volume like this pre-market, they're likely to be sustained. Now, with that said, does not mean Amazon cannot make a pullback. So if it gets back, let's say, to 1850, 1860 level, that would be an area which you want to pull the trigger and you want to buy calls, not puts. Okay, so Amazon is strongly positioned to possibly hit 1900, 1905 today or Monday, despite some of the other stocks selling off. And again, the reason why is because all the other stocks that are at all-time highs, while Amazon is playing the catch-up game and viewed by investors, institutional investors right now, as the stock where they want to put their money in, because everything else is freaking overpriced. So everything else could be making a pullback. Amazon shares could still be moving higher from here. So Tesla pre-market pops to 437, all-time high officially. Okay, we're looking to enter the trade, guys. So if it opens at 435 here, we're buying puts right at the open. And then if it bounces to 337 again, we're looking to buy some more puts in the expectation of it reversing. First target level right here, the 430, 431 level. Second level easily could be 426, 427, with the probability of it actually hitting 415, possibly 409. So with that said, we've analyzed the Tesla chart in substantial detail, and we're seeing that based on the trajectory and the patterns created in this chart, it is due for a pullback, not a crash, but a pullback. So BKNG is probably our favorite trade for the day. What we really want to do is this triple top formation officially was hit down to a point yesterday before the market closed. So we hit 2068. So we're looking to buy BKNG puts right at the open, 2070, 2060 puts at the open. The stock could easily reverse. Another interesting thing, we're noticing that Shopify is really topping here. So we bought some puts yesterday in Shopify. We're going to continue to buy Shopify puts today in the expectation of further drop next week. S&P, we've covered that. Clear volume characteristics on the drop-off. Everything's got low volume besides Amazon, guys. So we are probably moving closer and closer to this blue dot right here, guys. We don't have much. We can actually, this green area right here could represent a drop, or at least 2 or 3 day drop in the beginning of January. So we got to be ready for it. Yesterday was officially move 7. We had a prediction for 7 and 11. We got to move 7, guys. This is how it looks on the chart. They buy the dip once, buy the dip twice, buy the dip 3 times. And instead of what we've seen been sort of typical in the last few days, where the market sells off towards the end of the day, in many instances over the last 2 weeks, we're actually getting a pop at the end of the day. Highly unusual, considering if we break this move down, there's clear behavioral characteristics of move 11s, 2 pyramids intraday. So this, we haven't seen this happen in years. So that is something to pay attention to, because this could be similar condition to the melt up. So when we analyze January 25th, 26th of 2018, this right here tells us that we could be very near that moment. So strong move 2 or 11 intraday, basically this potential move 11 that could have been a move 2 and another move 11. that could have been a move 11 for the day, resulted in this pop higher. So that is highly, highly unusual. That's against all probability. So all the odds here. So that is not likely to be repeated. So expecting a sell-off going into the end of the day today. Move 4-7 on a 2-day sequence. This is how it looks on the charts, guys. 5-day sequence 7-7-11 4-7. And what we're noticing, and again, these pullbacks, they have been happening, and we're due for one today. So if you break this 5-day chart, we're due for a pullback today. However, it does not tell us that the pullback is going to be huge in its magnitude. So we can easily drop maybe 10 points by the time all said and done on the S&P 500. So the move for today, we're given a high probability to move 2 and 11, because early in the week that 7-7, that powerful sequence of 7-7 that could have resulted in another 7, it was broken. So, and VIX could possibly be ready to break out of this side trend where it's been hostage for some time. An indication of that, and we've noticed that in the past many times, when VIX is doing this, you see this crazy, super sharp lines lower in the values of the VIX. They typically signal a bottom in the VIX. So if VIX is bottoming and it's going to break about 13, 14 today, then clearly we can easy get a 10, 12-point drop on the S&P futures overall. So with that said, here's an update on the calendar. Move 4, move 7 with VIX sideways trending, slightly moving lower. We're tracking for an easy move 2 or 11 today, guys. Projections also for next week, we're focusing, we're preserving capital right now, not putting any big positions on, but we're getting ready to really trade next Thursday and Friday on the bear side if the Chinese data is not going to be turned out or if it's going to miss expectations. So be ready. This could be huge, huge days, guys. Okay, you could make in these 2 days what typically you could expect to make in a couple of months. So this is some really great days coming. So again, focus based off the 2 possible moves we're going to get today. Focus on this 10-15 reversal lower, bearish reversal lower, which could actually initiate today right at the open, but overall, we're likely to open higher and then reverse by about 10-15. So keep that in mind as you're trading today. And do not buy puts on Amazon. Buy calls on Amazon when it makes intraday dips, because they're likely to support the level of 1850, 1860 in Amazon. With that said, guys, make it an awesome day. I'll catch you on the next trade soon.